Welcome back to Switzer. Now it's time for our king of charts, Lance Lay from Accountancy Invest, to join us with his latest prognostications on what the weird and wonderful world of technical analysis is telling us right now. Lance, how are you, mate?
Very good, Peter.
Okay, so last time we were on the program, now we haven't got the clip. We had a technical issue with the clip.
Okay.
But I think we've got a chart of your last.
Right.
So let's show that chart now, guys, and let Lance explain what he was saying then.
Yep, okay, so actually this chart is the chart that's for today.
The first one for today.
The first one for today, wasn't the one from last week, but last
Okay,
time.
well look, forget that chart,
We'll
Lance.
just launch into it, mate.
Yeah, just tell us what you said in summary.
All right, so on the 30th of January there on the chart, you can see that was when I was on last, okay?
Yeah.
At that time, I said that the market was looking for a top.
Yeah.
It was due for a pullback. I thought that it could go up to those two little lines, the little
The
L.
I and the L?
The I and the L.
Yeah.
I said it could flick up there and come off.
Gee, it looks as though it did that, Lance. So you're showing a chart that portrays you as being absolutely on the money again. Is that what you're telling us?
Well, you know, that's right, Peter.
Okay, I guess you can't change the facts.
I can't change that fact.
Yeah.
Look, so where we're at now, if you go back onto this chart, we're currently, this is the US S&P 500.
So they've had a pullback.
They're in the progress of a pullback.
Yeah.
And what?
By the way, Lance, do you know what officially a pullback is?
I think
it's 5% and over.
Well,
5 and 10%. But you know what less than a pullback's called?
Indigestion.
No, close. Digestion.
A digestion.
Digestion. It gives you indigestion. All right, so obviously we're in sort of a pullback kind of phase.
Correct.
Okay, yep.
And so really what happened is that, see the 18th of December, there's that
middle of the chart,
in the middle of the chart, that level is G. Remember we had that discussion about G before?
Yeah. Yes.
So G,
it's good, wasn't
it? If it broke, it would be good. That was 1,448.
Right.
And obviously it broke through there on the 1st of January, 2nd of January, after 31st of December.
Yeah.
And now where we're headed.
It's a nice trend, isn't it?
It's nice. In fact, what it's done 13.9% since the 16th of November on the bottom there.
Yeah.
And up to the very top, which was really only a few days ago, you know, it got to 1,530.
Yeah.
So I think we're going to come off to those levels that I mentioned last time, the very first S.
Yeah.
That would represent another fall of 1.67%, and if we can go to the G, the good, back to the G again, which is the larger S, the 1148, that'd be a 3.3% fall from here, but actually a 5.4% from the top.
Okay, so summary, you're expecting the next month, because you always come on a monthly basis, you're expecting to see a bit more of a pullback. Yes or no?
Yes.
Yes. Okay, next chart. Good. They're telling us we're running out of time.
All right,
so Shanghai Composite.
Shanghai Composite, very quickly, from 1st of November 2011 down to November, and that's November 29th on the bottom where the N is, where the B is. It bounced off B for bad.
A big bounce, wasn't
it? Bounce. That fall in the year was 22%. It has bounced now since the end of November up to the very peak there of 24% in 3 months. And it's huge. And it's come off now. There's two little yellow lines down below, which I think will make it come down and about another 2.3% to 4.8%. And I think it should stabilise from there.
Okay, let's go to the next chart. This is the one we'll finish on, mate. Go.
Well, the ASX 200, I rarely talk about this, but this has been, the Aussie market has been a huge mover. Again, from the 16th of November, it has gone up 17.8% to the top, which is 5106. I think it'll pull back. It'll get to 4828, which is about another 4.1% fall. And I think it'll stabilise from there.
Yeah. So what you're saying, for anyone who's dying to get in the market, maybe over the next few weeks there's going to be an opportunity, but there's not going to be a deep opportunity. It's going to be more like a pretty shallow pullback. Well,
I think, Peter, when the November month was the month when I came on, and there was the G and the B. We broke through the G. Everything's rallied like crazy. I think that sets the tone actually for this year, but I think it's gone too far too fast.
Yeah.
I said that last month. It's the markets are off from last month.
So even though it's guesswork, the opportunity to get in the market sometime over the next few months is probably going to be there. But the way that this market is rocketing up, you just can't tell, can you?
Well, technically, the signs are in that it's going to come off, Peter.
Yeah. Okay, that's your business. Any other final point? We are running out of time.
Well, Japan actually.
Quickly then, go to Japan and we'll get out of this.
This has gone up 35% in the last 3 months. Again, from the middle of November. It's going to pull back to those levels as well.
Okay, mate. Fantastic. I'm sorry we're out of time. Too many people on the show, but always great to see you.
And you.
Okay, if you want to read my thoughts each morning at the close of Wall Street, check out my website, switzer.com.au. And if you have a self-managed super fund, have a look at the switzersuperreport.com.au website. And if you've got any questions for me or ones you'd like me to put to an expert, email me switzer@skynews.com.au. I'm Peter Switzer. Thanks for watching. I'll see you tomorrow night.